Hey, this is Zachary at the Trade House, and as always, trading involves risk. Be certain to hold yourself accountable for any actions that you take in the financial markets. Now, we're starting off as usual looking at the economic calendar, going to see what could potentially influence the market. And what I noticed this week, there is a lot of speeches happening. On Monday, we have the European Central Bank president speaking twice during New York session. In the evening, we do have a monetary policy for the Australian dollar, followed by more speeches on Tuesday morning. We do have this British pound inflation report. And then in the evening, we have Yellen speaking, which is going to influence the US dollar. Wednesday, we do have our standard news with the unemployment claims and this monthly core durable goods order report that's going to be influencing the market in some sort of way. And then in the afternoon, we do have meeting minutes. And if you trade the NZD, pay attention to the retail sales. This is a quarterly report. And of course, we do have some more British pound news here on Thursday. And to end off the week, we do have another European Central Bank speech, as well as this core retail sales news on the Canadian dollar, with one final speech for the Swiss franc. Now, the thing to realize about all of these speeches is that it's very speculative at the end of the day. You know, traders all around the world, they have access to actually tap into a live version and listen to what is being said during these times where, you know, economic leaders in a sense are speaking about different monetary policies and different changes that are happening in the economy. So while they may intend to say one thing, the message in how they actually communicate it, you know, traders are going to interpret that in many different ways, and their perception of what is actually being said is going to have some level of influence on their trading decisions. So keep that in mind. You know, that's really all that we're going to talk about for the fundamental side of things this week. And we are going to get into the technicals now. We're looking at the dollar index on the daily, and we can see we do have our daily fibs. We also have two different zones that we're playing within right now, and these were identified last week during the outlook. You know, my next target area at this point would be down here at this lower level, and you'll see why when we hop onto the weekly. I mean, looking at this bearish momentum, we had a nice candlestick pattern that signaled the potential for this bearish movement. Now we're trading right above this bottom zone. We have touched the 200 exponential moving average, and really seeing how much bearish activity there has been for the duration of this year. We're at a key turning point right now where if price decides to go lower, this really is the next area that would make sense, and then potentially seeing that continuation down to our 61.8 level. And let's just take a look at this zone that we've identified here. We can see there's one candlestick that wicked down and tapped it before we went up and traded at this 100 level. We can see that we pushed through it right in the new year here, end of 2014 to start off 2015 with this bullish candlestick. But again, that was based off of a lot of momentum that happened really throughout the duration of the second quarter, the third quarter, and the fourth quarter of 2014. So that was a lot of buildup. Looking back even further, there's really not too much interest trading at that level beyond when we were playing around here in 2005, also here in 2004, and a little bit in 2003. But ultimately, what I'm seeing here, and we can take a look at the monthly just to see it a little bit more clear, is that there still is quite a significant amount of space between that 200 EMA and where price is currently trading. There's a lot more interest in the last 20 years at these lower levels, and really when we were trading up at these higher highs, we did have a lot of bearish momentum push us away from that, and we did see price stall out a little bit right at this new area that we've identified. So we could see something similar happen on the monthly chart, where this 200 EMA eventually comes into a area of confluence with this zone, and then we could see something like what happened on the weekly, or on the weekly rather, where we had gone down, tapped that zone. But right now, where price is trading and seeing how last week ended, I would expect price to trade a little lower to start off next week. And really, we're going to really have to see how these speeches influence the market. With the way this is forming, we could see something where price comes back up into this zone one more time, somewhere right around our 38.2, and then see the continuation drop. In a sense, on the daily, this would almost be like a head and shoulders pattern, where we have the left shoulder coming up to the head and the right shoulder being formed. This is a very vague drawing of it, but you can really start to see, and you can also notice how this left shoulder, this potential left shoulder was formed with the bearish reversal pattern forming right at the 38.2, pushing price below the zone that we're currently trading on top of, and then of course seeing that higher high, the tap 1, tap 2, push down, and then as I mentioned, it would make sense for us to see a little bit of retracement here, perhaps to start off next week, and then seeing that continue to the downside as the week progresses is more likely, in my opinion. If neither of those two situations happen, where we actually see that and then we see it come down, the only other thing that I could really see occurring is just price stalling out in between this zone to drag our 200 EMA down a little more. That's all that we're going to talk about here on the dollar. I am bearish on it. I still do have that bearish sentiment. Let's take a look at the GBP USD. We can see here that we are uptrending on the daily, just very slightly, trading above that 200 EMA. We're seeing some higher highs being formed, as we do have this whole area over here that really has created a new high from all of this range back at the end of during the summer of the 2016 year. With how this is forming, we do have the clear indications of an uptrend with those higher lows, the higher highs, and I know that I'm not putting ovals on here, but it's very clear to see as you train your eye. And let's take a look at the weekly here. We can notice that we are approaching that 61.8 level, being in confluence with our 200 EMA. And I would expect in the next few weeks to see another large bullish candlestick, something like this, really just pushing us back up towards these higher levels, because it does look as if we're building up for that. Price traded at a high for this year of about 136,572. If we wanted to be specific on the price, we hit that high, had 3 consecutive weeks of bearish activity, and then we just kind of stalled out at this 38.2. This candlestick right here at the end of October, to me, signals some more bullish movement to come. If I were to just simply draw how that could look, I mean, realistically, when we're expecting something like this to happen, that's not to say that we're not going to see one more final push down to the 38.2, perhaps even a little bit lower. And if we were to actually go ahead and plan a trade, one area that I would be looking at in particular for an entry would be right around the 1.3 as like an optimal. area. However, there would still need to be a certain level of caution if price actually did come down here, because we would need to see a very strong retracement off of that demand zone. But let's take a look at the daily once more. We can see that that price level that we had identified, it is right around where the 200 is as well. We would still be trading above all of this. And I mean, right now, with how these candlesticks are forming, considering that there's not too much news that's going to be influencing the British pound, you know, we have one speech on Monday, we have their inflation report on Tuesday morning, and then we have just the US dollar news and a little bit of other things happening towards the end of the week, but there's not too many big events. And more often than not, you know, something like an interest rate decision, that is going to be the cause of candlesticks like this or candlesticks like this, where we see those large movements. And that's actually what this candle was. This was the last interest rate decision that they had. Push price down. You know, this is about a, let's just be very accurate, from the high to the low. We're talking about 250 pips or so. And notice how we just hit this whole area. We can even go and draw it with a little rectangle. We can extend that back and just see what else it comes into alignment with. And I mean, noticing just how even with this, you know, we have these lower lows over here compared to how price action has been trading. And, you know, it does look very similar. We have that strong, aggressive, bearish movement occurring after Brexit, you know, after the announcement of Brexit. And then we had that retracement back up towards this level. And then we just kind of ranged for a couple of months. Whereas right now, you know, we did have that strong bullish movement above all of this, and then followed up by the immediate bearish retracement. This did occur over several days opposed to, you know, just a couple in here, and we're still seeing that same sort of range playing out. But really, this is a very tight consolidation compared to what happened over here in the 2016 year. So I am expecting some big moves to occur on this currency pair very, very soon. You know, whether or not we get something like this, that could be, you know, a likely scenario to see something just continue to stall out a little bit more heading into the 2017 year. Start off December with one more push down and then continue going up. Or this could be as low as we've gone and we just see price continue to rise. Bullish on the GBP/USD. Let's go ahead and look at the US dollar Canadian. Now, the way that this is moving, it's actually very intriguing to me. On the daily, we can see that we did get quite an interesting candlestick close there for last week. And let's go ahead, let's see just what our weekly chart is looking like. We are trading above that 200 EMA. We did close within this whole week. You know, let's take a look at the monthly here. Again, we have a lot of space above this 200 EMA. And really right now, when I say that price is trading in an interesting place, that's because there is a lot of interest in these higher levels, and we can clearly see that from the 2016 year. We can also notice that we peaked at a new high over here in the 2017 year when we're looking at these 2 years specifically, and then we immediately had a very strong movement away from all of this, and we actually created this new low point. So right now, you know, we can go ahead, we can identify one area of demand, because when we hit this low, it is right around a major quarter at 1.2. We did see about a 900 pip retracement off of that zone back up to the 200 exponential moving average, which at this point we have touched it, you know, once, and right now we are just trading a little bit below it. But this to me looks as if, you know, this is about as high as we're going to go. And if we were to come into the hourly chart, look at some more intraday trading activity, we can notice just how price is reacting. We closed last week with a very bearish candlestick to end off the day, after seeing this little tiny rejection off of the 200 exponential moving average. Could have collected about 30 pips in here, but really this sell-off, after this bullish movement throughout the rest of the afternoon, this basically took away all of the gain that the US dollar made over the Canadian. And really right now, the next area that I see as a high probability for price to go is down here. We're talking about a potential 75 pips as a first target away from where price is right now. And I mean, beyond this, we can go ahead, we can extend that back just so that we have a point of reference. Really, the next area where I would expect price to go is down towards this whole lower level in here. Now, you're going to see why when I go back to the daily. We're going to take a look together and just see how exactly these two areas come into alignment. The first thing that we can notice with this 75 pip target to the downside is that we did have some trading activity over here in the 2015 year. We did have, price push down through it, reject off of that bottom zone, and this is also something to keep in mind. This is right around another major quarter, that 1.25 level, and really right now with the way this is forming, it almost looks to me as if price does have some potential to go a little bit higher, not as high as it's been, but if it does go any higher and tap this whole area one more time, the 1.28200 level, if we are going to be precise, I would be expecting it to continue to the downside, perhaps seeing how price reacts when we get down to this 1.26 area, but looking for it to trade lower, with this being a second target, and then of course down here being the third target. I'm not going to say that price is going to move in this exact manner, because while I don't believe that's true, it is something that could be likely if we're going to be going back and taking one look at the dollar index to see, how we're expecting this head and shoulders pattern to potentially play out, with the left shoulder being formed, the head being considered here, looking for that early retracement to start the week. Perhaps even that just comes through the form of consolidation with a wick to the high, and then seeing that drop to form that right shoulder. The right shoulder would be confirmed when we do pass. Let me just go ahead and put on the price level. When we do pass this whole area in here, I mean, really there's nothing at that point to stop price from actually going and coming into this whole area of interest. So it's going to be a very interesting end of the year. Christmas is either one of those times where we're going to see a lot of volatility, or we're not going to see very much volatility at all. And why I say that is because we can look at the charts and just see, for comparison, probably a lot easier here on the monthly. Right here, December, this was what looks to be a fairly volatile month last year for the dollar index. Again, December over here in the 2015 year, quite a lot of activity. Coming to the, this was a 2014 year. 2015 candle was here. 2013 candle, that was actually quite small in comparison to the last few years, and it almost looks as if, recently there has been more trading activity occurring around the end of the year. Now, seeing how much bearish movement has been occurring within 2017 on the dollar, seeing how our 200 is down here, seeing how our key reversal area at the 61.8 is also looking to the downside, this to me does look like we're going to see a red Christmas on the dollar index. Let's look at one more chart. Let's look at the US dollar Japanese yen. You know, we are here on the monthly still. We can see that we had a very nice rejection off of that 61.8. Quite a lot of space above that 200. And I mean, if we're looking for more bearish movement on the dollar index, an ideal target on the US dollar Japanese yen would be that 100 level. You know, that is a very big quarter level to consider. That is also, you know, an area in here where we can clearly see there was a lot of demand, because the last time that we came down, we had a low over here of 98.5, let's say. We traded there for a few months, you know, hitting that low, hitting that low, hitting that low. And then over here in November of 2016, this was actually when President Trump, you know, was elected into office. We see one last push down with a very bullish month right up to that 61.8. We created a new high point over here. We didn't even touch any of this. And when I say any of this, I'll put a rectangle just to actually show you and identify it for you. Everything above this rectangle we did not touch. And we can notice how much momentum came here in February to really push us down away from this high at the 125 area. And we can also notice that right as soon as January 2017 started, we did come back up. We tapped that high one more time, and then we engulfed that entire December candlestick. And then really we've just been working on taking some of that back, you know, some of this candlestick back. And right now there is a lot of bearish momentum picking up in the month of November for this year. Coming into the daily time frame, you know, we can even just see again how that candlestick with Trump being elected actually formed. And we can notice right in here there was a gap over the weekend. Price closed, it gapped up, traded up for the second day, and then here on the 9th, you know, we did see a very large stop hunt to the downside. This is about 400 pips of movement on this wick, and then we closed the day bullish, and then we saw that continue with some very strong momentum right up to 118.6, you know, creating that high. And then we can see where price is right now. This oval was something that we had identified last week on the weekly outlook. Price, when we were trading up here at this 61.8 reversal zone, we can see there is an area of supply that we had identified. We can see a lot of confluence right in here. We can see how price came up, tapped it, had this very strong bearish candlestick, and then just continuing down towards our 38.2, towards the 200 moving average, towards all of this confluence that we had. And if we are looking to see how price action could continue on this, you know, it would not surprise me if we're looking for that little bit of upwards movement to start the week. We could see price rise, you know, let's say 50 pips. The 112.5 area could be an area where we could look to enter some sells hypothetically, and then seeing price just continue down towards those lower levels. This whole 110.5 area would be a very good target if you're looking to, you know, be in this trade for, say, next week. Because I do just want to make note of something. Coming back to the weekly, we can see just how much bearish activity has been occurring. And with this strong rejection off of the 61.8, let's just look at this from a historical standpoint. You know, the first time where we rejected off of it over here, we did see price trade all the way back down to that 200 EMA. We gapped up, came back, tapped it again, traded down to that 200 EMA. Once again, time number 3, we came up, tapped it, traded down, and actually broke the 200 EMA, pushed into the lowest point that we've been in the 2017 year, took it back, came back, tapping this now for the fourth time, and just even seeing how much momentum is coming into play, it would make sense from a probability and technical analysis standpoint to see price continue this pattern. We have 1, 2, 3 times in our historical data just within this year where prices came up and touched this and done exactly that. So we could be looking at anywhere, around the 109,500 level. For where that is, price is about 275 pips away from that right now. I'm not saying that you should enter this trade as soon as market opens or anything. Obviously it's important to do your own analysis and just remember the risks involved, but it is more likely to see price come down. There was clearly a lot of demand in here because there was a little gap as well. There's just a lot of confluence lining up. Our 23.6 fib on the daily, this area of demand, our 200 exponential moving average, and depending on how much momentum comes in, this could be the time where we actually break this low and then start heading down towards this lower level, that area, the 100 confluence that we had talked about, and we could see price really make a rapid shift in these next few months, considering all the economic events that we have at the beginning of December, the standard NFP. I'm sure that there are some interest rate decisions in there as well, more monetary policy, and this right here would be a very solid area of demand. And I do believe that with these 4 levels that we have on here, as well as the confirmations that we're getting on the daily, if we're gonna think in terms of a swing trader and just look at the market with that bigger picture perspective, right now we are bearish for the 2017 year. Hopefully that makes sense. And as I mentioned, with these price projections, I'm not stating that this is exactly how it's going to happen, although it does look likely. This does look like an area where we could see price retrace back to, and really this could be a very low risk to high reward potential trade. If you were to enter at the 112,500 level with a 30 pip stop loss, you would be talking a stop right up in here. We'll go ahead, we'll make that red, we'll put the price on just so that you can see it. Stop loss, make it red, show the price. So at 112.8, with the entry being at 112.5, and of course the target levels that we had mentioned, coming back to the daily here just to really put an emphasis on where we could see price move to. The first level being this whole 38.2 area, it's about 80 pips to the downside from our entry. We'll go ahead, we'll put on our measurement tool. So first target, about 80 pips away, 111,700. Second target, really anywhere in here around that 110,600 price. So we're talking at that point anywhere from 180 to 200 pips as a second target. And then of course, we could think even long term, coming back to that weekly perspective, depending on how long you would want to be in a position like this. There is potential for 900 and let's say 900 pips on that trade. So very low risk, high reward scenario setting up, even if you were to take profit if price came down to this 109 level. We're talking 300 pips. That's a 10-to-1 risk to reward when it comes to your stop loss from the entry if price comes back up to this 112.5 region. And as always, if you're looking to take market executions rather than setting pending orders, pay attention to the price action, pay attention to the patterns that are being formed, and really just use your intuition to see how price action is reacting when it actually comes and trades at these specific zones that we're looking at. If you had identified this, you could have waited the entire week for this candlestick to close, seeing it close bearish. With the rejection, you could have got in anywhere off of this wick. This was about a 30 pip wick to start off the next week here, which really was just the week that just passed. Even if you entered at the open of that, you had a potential collect over 150 pips, maybe a 35, 40 pip reward or stop loss, depending on where your entry was, just to be safe. And, that's still right there. That's a very high probability scenario. And it's just all about getting better at identifying setups like this. And coming back into that mentality of, would you rather take a high quantity amount of trades and, collect 10, 20, 30, 50 pips here and there, but be constantly taking new positions? Or would you rather spend your time identifying the high quality setups so that you can enter the trade with complete confidence, have a lower risk, size your position according to your account balance, and then see that trade actually play out and really just feel better about yourself and your ability to be the successful trader that I know you can be? Because the more that you practice doing your analysis and seeing that play out, whether it be through a live or demo account, you're going to just naturally become more confident and really just start to separate yourself from the strong emotional responses that you'll feel when trading the markets. As always, I do appreciate your time. Please leave a comment, let us know what you're looking at this week. Make sure that you subscribe to our social channels, including where this video is uploaded, so you can be the first one to be notified of any upcoming releases or live events that we will be doing. You can find me at zacharyhogan.online, and I'm sending many positive vibes from the Trade House. Thank you, and safe and happy trading.